Hi there, Tony Sycamore here, IG's market analyst for Australia. After a brief FOMC-inspired volatility episode midweek, regular service resumed for US stock markets, which finished last week at fresh record highs following strong earnings reports from megatech, with Meta up 20.3%, as well as a robust US jobs report. The US economic calendar and earnings calendar this week is much lighter following a blockbuster couple of weeks. We will have ISM Services PMI, which will be of interest, as well as some updated thoughts from Fed speakers, including Bostich, Bowman, and also Barkin. US quarter four earnings season continues with reports from companies including McDonald's, Caterpillar, Alibaba, Walt Disney, and many more. Let's take a look at the chart of the S&P 500 and the Nasdaq to see where they start this week. This is the chart of the S&P cash, the S&P 500. Now, what we can see here is there is some trend line resistance coming from this 4100 high back on the 1st of December, which picks up this 4607 high here from late July, and it comes in around 5,020. So this is the first level we need to be mindful of. The second level, of course, is 5,000 is a huge psychologically important level for this market, and I would expect it to attract some sort of order flow as well. So in terms of where the up move could go if it extends after last week's rebound, this is probably the area right about here, which could see a potential reaction. Keep in mind, we continue to see this move from the October lows as a wave 5, which we do think is starting to run its course. It does look mature. We're seeing bearish divergence on the RSI, as we've noted previously, which doesn't mean we're looking at a sell signal. It just means that we think this rally has matured and that a pullback is likely to eventuate in due course. Do need to be aware as well that the middle of February is seasonally a weak period. So we're getting into that window now, technically and also from a timing perspective, whereby we could start to see a pullback occur. Looking at the Nasdaq, well, the same situation applies. Mid-February is where we'd expect to see seasonal weakness come into around the first week of March. It does need to break below this uptrend support drawn from the March lows, coming in around 14,058 was that low. And at this point of time, it's coming in around 17,100, which picks up this low from last week quite nicely, 17,128, and which is also reinforced by this high over here from late December, coming in around 16,969. So if we were to see the Nasdaq break below this area of support here, I think that probably confirms that it's completed a wave 5 high, and at the very least, we're looking for a pullback in the order of around 5 to 10%. Until those levels break, of course, you need to give the upside the benefit of the doubt. Thank you for listening and have a good week ahead.